Today's venture capital investing environment is quite exciting. This is the largest year of venture capital raised since, I think, the crash, actually, in 2001. So the business has come roaring back, the returns have been strong, and the LPs are interested. But one of the challenges for us as investors with that new capital coming into the market is that has helped raise the prices of the private companies. And so you're seeing some quite eye-popping valuations for private companies happening in the venture business. It's a question we ask ourselves and our LPs ask us all the time, is, can you actually make money in this kind of environment where there is a lot of capital available? And so we think a lot about the right valuation for the companies that we're investing in, and trying to make sure that for the price that we're paying, we can definitely see a return, even if the valuation environment returns to quote unquote normal. So as an investor, the challenge is to try to really, number one, pick the markets that are going to create winners, pick the winner companies in those markets, and then try to get to the process early enough that you have some kind of an angle on the investment and a relationship with the entrepreneur. It doesn't mean that you're going to get it for an off-market price. So if you're willing to go outside of Silicon Valley, there is just less competition because the money is leaving those places. But the companies are not undiscovered, but the competitive environment for investing capital is a lot reduced in those environments. And if you're the kind of firm like us who, we have portfolio companies, I believe, in 18 states now. So if you're willing, you've shown evidence that you are willing to fly to meet the entrepreneur, and you are willing to fly for board meetings, and that you have a body of contacts and value add that you can share with that portfolio company in another state, then you have a much stronger chance of making that investment and of being able to make it be a good investment because you've got the value add capabilities there. So to build a successful company outside of Silicon Valley, first of all, there's many existence proofs that it is possible, even though you'll see some people say that you have to come to Silicon Valley to build a strong company. Really, you need two things. One is that the environment has to be fertile to raise startups. So meaning, largely that's about talent. You need to have enough people and enough other companies in that area that when it comes time when you're scaling the business locally and you need to hire the next worldwide head of sales or the next level marketing executive or technology executive, that you're going to have choices, very strong choices, people who have the capability to build the companies to the next level. So you've really got to have that ability. What we need to be able to bring to the party is both the help and kind of the heft to allow those companies to attract the talent and attract the capital and other things. But I think partly it's the biggest thing that we can bring to a long distance company is actually an open mind and a very clear, open and respectful communication channel. So Scale Venture Partners is a very diverse firm. I mean, we have three women partners, the most of any firm in America, unfortunately. And then a breadth of other experiences that we bring around the table. We have numerous other investing professionals who were born outside of the United States. We have people of color and people of different ages, clearly. So we think that diversity by design is a competitive advantage because it lets us see the possibilities in the different companies and listen to the facts of the situation and not rely on quote unquote pattern matching that we are of a certain way and we expect successful entrepreneurs to mirror that. We're really we're looking for, do the people that we're considering backing have the right background, have the right attitudes, have the right ability to attract additional talent. And we think that in general, diverse teams have those kinds of capabilities more so than kind of monoculture teams. And we think our diversity within the firm makes us attractive partners in the true partnership sense to entrepreneurs who are trying to build their business. The good thing about the venture capital business is it's a business where we're judged quantitatively on returns. So there's not in the short term, there's a subjective, how is person XYZ doing? But in the long run, right, you make returns or you don't. And so I think women are generally proven to be better investors in almost every other discipline. I mean, the stats show that we have sort of more patience, more thoughtful decision making, trade less, but trade better. And so I think for women to succeed in venture capital, there has to be the changes. Women need a long enough time to prove out their track record. I think that we can have, we do have track records that are just as good as the guys, but sometimes the environment makes it tough for women to stay in their firms long enough to actually have their track record prove out. So I think that kind of tenure issue in there is probably one of the things that as an industry we need to figure out how to address. 2015 should be a really exciting year for the venture business. We have just a number of enormous technology transformations that are happening that are causing companies to have great market opportunities and get to scale very rapidly. So between the monumental technology shifts that are going on of large enterprises to cloud and mobile, and you have almost every company having to become a software company. I mean, for example, I have a company that does a mobile quality assessment of apps, Applause. One of their largest customers is L'Oreal, the makeup company, because L'Oreal has to make really great makeup mobile apps. So when L'Oreal has to become a software company and every other company has to become a software company, that's a great time to be investing.